Zacks Screen of the Week, an overview of a timely stock screening strategy aimed at helping you produce more profitable investing results. Let's talk about new highs, shall we, with Kevin Matras, our stock screener extraordinaire here at Zacks. You know, a lot of times you come up with these convoluted headlines and I can't really tell what you're talking about, but this one's pretty clear.
Right.
You're talking about new highs.
How'd you guess? Yeah, new highs it is. And, you know, the screen that we're going over today, it's a very simple concept, but it is a very, very powerful concept, and that indeed is buying stocks making new 52-week highs. And I know some are reluctant to buy stocks making new highs, but I just wonder if you're one of those guys out there, have you ever asked yourself why you're so afraid of buying stocks making these highs? Because I think it's a great thing to do.
Well, I was just about to ask that question. As a matter of fact, why do people back away from stocks that are making new highs?
You know, I just asked a rhetorical question, but I really don't know. I suppose...
I don't leave anything go by the boards.
I suppose it is because after a stock makes a new high, I think people probably believe that the stock has more room to fall, potentially, and they're afraid of getting in and seeing all of that potential downside underneath them. But I mean, if a stock is making a new high, actually that's a good thing. It is just as good of a thing seeing a stock making a new high as seeing a stock make a new 52-week low would be a bad thing. And I'm pretty sure that a person who dislikes buying stocks making new 52-week highs would probably be tickled to death if in fact he was in a stock while it was making a new 52-week high. And the reason why I believe that it's a good thing to do is because statistics have shown that stocks making new highs have a tendency of making even higher highs. So I don't think that you should be afraid of these kinds of things at all. And the thing is, like I said, if you were in a stock making a new 52-week high, you would feel pretty lucky that you were in it. Now, of course, the fundamentals still have to be there. You have to keep a watchful eye on valuations because all of those things have to make sure that the stock has enough reason to be able to power higher. For me, though, when I am looking at potentially buying a stock making a new 52-week high, one question I will ask myself to try to keep it into perspective is this. If I was in it while it made a new high, would I be excited? And would I expect to see the stock move higher? If the answer is yes, I would want to buy that stock. However, if the answer is no, I would then try to avoid it.
Well, if you were already in it and you were glad to be in it,
right,
then why not?
Right. That's the great question to ask yourself, and that's what I think people fail to do. I mean, this topic actually reminds me of a question somebody had asked me a long time ago. I had just purchased a stock that was making a new high. In fact, it was actually at a 5-year high, and he had wondered if I was nervous about buying this stock. And I had told him, big deal, it made a new 52-week high. But it also made a new 52-week high last year, the year before that, the year before that, and the year before that. So you have to stop and think to yourself, if you get scared out of being in a stock or getting into a stock every single time it makes a new high, imagine all of the profits you're leaving on the table by shunning those stocks from your portfolio.
Yeah, probably many investors don't look at it that way.
You know, and I really think they should. You know, not all stocks making new highs are going to continue to power higher, but a lot of them do. And like I said, statistics prove this to be true. And I think including these kinds of picks in your portfolio can really help supercharge your portfolio.
All right, parameters then for stocks making new highs.
All right, first one is this. First one is stocks trading within 5% of their 52-week high. And the expression looks like this. Current price divided by the 52-week high, and it has to be greater than or equals to 0.95. That means these stocks are either at a new 52-week high, they have just hit a new 52-week high and are still trading within 5% of that. In other words, they pulled back just a bit but are still close to that area. Or they are climbing towards that 52-week high and are in striking distance of making a new 52-week high.
All right.
The next item is I want companies with a Zacks rank of less than or equals to 2. Only Zacks strong buys and buys are going to get through. Then I add the price to sales ratio, and it has to be less than or equals to 1, and I think this is one of the critical things. First off, a price to sales ratio of 1 means you are paying $1 for every $1 of sales the company makes. A price to sales ratio of less than 1 means you're paying less than $1 for every $1 of sales the company makes. In my opinion, I have found that by focusing in on companies with price to sales ratios of less than or equals to 1, this helps me find companies that can still be considered a bargain or that can still be considered undervalued, even though they're powering higher to new highs. So I think this is a very, very critical element. Then I also want to make sure the volume is supporting these prices. So I am looking at the current average 20-day volume, and I want it to be greater than the previous week's average 20-day volume. In short, this helps me find stocks that is showing increased demand or increased buying. And if you see increased demand or increased buying, usually that means that you'll see even more increased demand and more increased buying, and usually this is a telltale sign that a stock has much more room to grow. Usually, too, if you see increased volume, oftentimes that will portend institutional support and institutional buying, and that is always a good mover. Then all of these things are being applied to companies with the price greater than or equals to $5 and an average 20-day volume of greater than or equals to 100,000 shares on a daily basis.
All right. Did you get any stocks that came through the screen?
Yeah, there was about 40 stocks that came through this screen. Here's 5 of them. One is Albany International. Another one is ConAgra Foods. Another one is H.B. Fuller Company. Then you have Odyssey Healthcare and Universal Holding. Very, very diverse set of companies, but all of these companies have a Zacks rank of a 1 or a 2, so a strong buy or a buy. They all have great valuations as defined by the price to sales ratio, and they are all on the move, powering higher. Definitely ones to put on your watch list.
Do you own any?
I do not have them.
All righty.
Yet.
Go to Zacks.com's homepage if you want to view a text version of this screen of the week that Kevin has put together. Just scroll down the homepage until you get to Kevin's picture, and the headline right next to it is the live link that you click on. It'll take you right to the story. And if you want to know more about the Research Wizard, the tool that Kevin uses to achieve all of his screens, go to Zacks.com/Research Wizard. With Kevin Matras and the screen of the week, New Highs, I'm Terry Ruffalo.